Good morning once again. Welcome back from Tourism Express that is proudly sponsored by Uganda Tourism Board. It is now the moment for our economic press. And yesterday we had an exclusive discussion with Mark Muyobo, CEO NCBA Bank Uganda, about shifting capital from consumption lending to production sectors. Now today we have a continuation of our previous discussion in the business world. To remind you, surveys carried out reflect that many small entrepreneurs struggle to access capital due to the lack of substantial collateral to secure sufficient credit from financial institutions. Let's have a deeper insight into this with Wadulo Arnold Mark.
Today, in the second part of the exclusive interview with Mark Muyobo, the NCBA Bank Uganda CEO, we delve deeper on how entrepreneurs can leverage positive cash flows for collateral-free loans to grow small trades into medium or large-scale enterprises. Is it possible? Let's find out.
So if you are distributing for one of the manufacturers and you actually have been hiring either tuk-tuks or you have been hiring pickup vehicles, and now you want to actually own your own vehicle, we actually look at your business, look at your cash flows, provided the cash flows are actually coming into the bank, then we can be able to structure the product. The second one, which is a very important one on the small and medium one, is our more cash solution. So more cash solution is where we actually lend on the phone, partnering with MTN, and we have close to 10 million customers. Out of those 10 million customers, about 4.5 million of them are actually active borrowers, and we don't know some of these customers. We actually don't know. We depend on the KYC that the MNOs actually have. So you borrow on the phone, you are able to get a loan on the phone, and based on your ability to pay, based on your savings, based on the cash flows that are actually going through the phone, we're able to even increase the limits. So we have people in Nakasero market, these vendors who wake up very early in the morning, and we recognize that wake up early in the morning, buy produce when it comes in, 5 or 4 a.m., buy produce using our facilities. At the end of the day, they have sold all those produce. They're able to pay back the loan that they've received on the phone, and that cycle continues.
Okay.
Yeah.
So you mentioned some few critical things that I want to touch on a little bit. Cash flows. How long are you looking at a financial year of cash flows of 3 months? Because the government recently gave a waiver, for some new businesses entering the market, and I was wondering if a business was about 4 or 5 months and they have a cash flow.
Yeah.
Are they, candidates for an NCBA product? And then also you mentioned the more cash. Okay. What are the loan limits? If a good borrower, you're a good borrower, how much? What's the threshold like NCBA can give me?
So I'll start with the first one. If you have been operating for, let's say, 5 months, the most important thing, and this is where some of the SMEs and MSMEs actually get it wrong, is that they don't have data. So you have a very good business, and when you sell, whatever you have sold, you keep it in your drawer, or you keep it below your mattress, and you cannot actually track these cash flows. And that is why we encourage people to actually use the banking system. So you, at least where there is you're able to have a digit along your name. So if you actually have certain funds that are actually coming in, you're able to trace them.
Okay.
The problem that I see, and this is around education, and that is something else I'm going to come to, that we need to enlighten our customers. In that the more you actually show that you're actually selling and whatever, I'm able to go back and say that, okay, Mark, this is what you have been selling in the past five months. You have been taking it through the financial system, and I'm able to then see a trend that gives me comfort that a certain customer, I can actually lend to that customer.
Okay.
The second one is on the more cash, and we don't have any limits. It is based on so we run algorithms where we look at your saving, your deposits, your amount of money that you're actually putting on the account, and based on that, we are able to increase the limits. That is where financial inclusion comes in. Yeah, on average, people borrow between 2 million and 5 million shillings.
Okay.
There are people who are even above that, who actually are engaged in meaningful business.
Could this money go even up to 10 million?
Yes, it depends on how much you actually are able to show that this is actually going through the system.
Awesome. All right, then it takes me to the other question. How can structured financial products like asset financing, which NCBA is big on, or operating leases specifically support industrialization and value addition in Uganda? What are your thoughts on that?
Very good question, and that is certainly at the fore of what we do every day. Asset finance, we are the home of asset finance in Uganda, in East Africa. Last year, we were recognized as the #1 bank as far as asset finance is concerned, because of the product development we have actually put into asset finance. So to your point, asset finance, like I mentioned, collateral is a big issue that stops most of the customers from actually growing. Using that very equipment, if we use that very equipment to actually take it as security, we then get rid of the challenge that most customers would actually have around collateral and expansion. Secondly, operating lease is where so there are two kinds of leases. There is the finance lease, where during the period we actually own the asset. At the end of the asset, you get to own it. But there is certain equipment where you just want to use it for a specific period of time. So for instance, vehicles, computers, and at the end of it, you really don't want to have the vehicle and have the residual risk. So that is the operating lease that it is almost like hire purchase, where you just come and hire the vehicle. You drive it, all the service and whatever is included in the package, and all you have got to do is to pay an amount. The other one, as far as structured financing is concerned, is around the trade finance solutions. And one of them that we have just rolled out last year is around the floor plan.
Okay, floor plan.
So, floor plan.
Okay.
So, you are a vendor. You import vehicles or machinery. You have a challenge around being able to bring in, because when you're importing that equipment or vehicles, it is holding your cash flows. It is holding your working capital, because until that vehicle comes here and you sell it, that is when that cash flow is released. Yeah. But what we do is that we come in and say, okay, you are buying from a manufacturer, let's say in China or Japan. You have a track record with them. You bring in, let's say, 10 or 15 units. We are able to provide you with a trade facility. Okay? That trade facility, we pay it to the manufacturer in China or in Japan. that vehicle or equipment is ours all the way from China up to your floor here. And that's why we call it a floor plan. Up to your floor here. And once you sell that equipment to a customer, that is when you actually then what you release the cash flow.
You release it.
You get me?
Yeah.
So most vendors, most people who are importers of machinery have that problem, because you bring in, you hear stories of you brought things, they have taken 3 months to get here, they get to the shop floor, they remain there for 6 to 9 months, they have not been sold. That is holding up your capital.
Capital, yeah.
But we can be able to really release it from you from the onset without having an impact to your cash flows.
Okay. So the last one I would come to say, we have less than 15 years to, Vision 2040.
Yes.
That's when this current structure of the development plans is seeing, at least thus far. What is the $1 million question that we really need to answer today? I know we've discussed and touched the different aspects, but what is that $1 million question that we must answer today, especially from the aspect of financing?
So I think this has been handled very well, and I don't think it's a question. For me, I would think that it is how we push it. I think it needs a lot of involvement, because tenfold growth in 15 years is not a small.
It 14 actually.
Yeah, 14 years. It's not a small thing to actually achieve. It is actually significant. But if everybody actually gets involved in understanding that this is a significant milestone that we have got to achieve. So the banking sector, the regulation sector, all key players within the economy, if they actually come together to actually ensure that we are able to push in the same direction, then I don't see any reason why we cannot be able to achieve it. So as the banking fraternity through the Uganda Bankers Association, we have had significant discussions we've had important discussions with the Ministry of Finance. We have a plan where, as far as the Uganda Bankers Association can be able to contribute to this tenfold growth. We have discussed this with Bank of Uganda as our regulator, and discussions are actually ongoing. It is something that we are quite excited about as far as the banking sector is concerned, and also NCBA Uganda, because some of those sectors that are actually being identified are sectors that we are very good at. Okay, agriculture, processing, tourism, manufacturing. We are actually very good at that. So for me, it is exciting. We are happy to be part and parcel of this tenfold growth, and we will continue to push as much as possible. We also need the development partners to actually come in and recognize that this is something that we are quite committed to.
Okay.
Yes.
By now, you know that it is possible to access collateral-free capital for your enterprise. So take advantage of all these capital offers on the market to scale your business and join the big leagues as Uganda targets for upper middle income status at 2040. This brings us to the end of our Good Morning Uganda business exclusive interview. I'm Wadulo Arnold Mark, and back to you, John.
Thank you, Mark, for those deep insights. We look forward to more perspectives from various economists on how to catalyze Uganda's economy to the $500 billion US GDP mark. Let's now look at your money and how it is working against